Guys, it's my pleasure to have you on this channel again. And in today's video tutorial, I'm going to be doing a deep dive into the topic how the bear market make people rich in crypto. My name is Progress Ibrahim, and before I zoom off, I if you have not subscribed to this channel, I want you to quickly subscribe to the channel. Subscribe, just click on the subscription button and subscribe, and also turn on the notification bell so that whenever new video is published you will automatically get a notification. Okay, having done that, also this is not a financial advice. As Trenndify Academy is not a financial advising company. What we do, we provide high quality educational content that will guide you in your crypto journey. Okay, having said that, okay, yeah, so this video is gonna be doing a deep dive into the topic how the bear market make people rich in crypto. Okay, yeah, before now I've been trying to think about two competing competing statement. Is it the bull market, or a question, is it which is it the bull market that make people rich in crypto, or it is the bear market? And yeah, so this video I'm going to try to explain how the bear market, to show you how the bear market make people rich in crypto and not the bull market. What the bull market does is simply confirm those people that are rich in crypto. Yeah, that becomes rich. Yeah, but what actually does the work is the bear market. And this deep dive, I'm going to also show you how you can use the strategy that people that maximize the bear market use, how you can apply the same strategy and you become worthy, or you make it big in the crypto space. Okay, so let's get started. Bitcoin, the inevitable financial technology. Over time, we've seen the trend. We've seen the economic environment in regards to Bitcoin, and we were actually seeing that this technology is here to stay. And now, there are many occasions, there are many events that occur that threaten the continuous existence of Bitcoin, as a technology, and the crypto space, blockchain, cryptocurrency industry. Such events, such as the China crackdown and banning of cryptocurrency businesses, Bitcoin mining in the country, that actually caused fear. That actually caused fear in the market, panic in the market, and it led to recapitulation where miners were selling off their Bitcoin, and that caused a huge crash into the Bitcoin price and the crypto market price in general. Yeah, so now after despite this was happening, despite this threat, despite the threat to the continuous existence of Bitcoin, one thing that has actually been a fact that has actually proven itself in cryptocurrency industry is the fact that the financial technology supporting Bitcoin and other crypto are actually very resilient. Yeah, the resilience nature of Bitcoin and cryptocurrency industry makes it inevitable. So Bitcoin is inevitable, it's here to stay, regardless of what the government will do and what the government is not going to do. Okay, now having said that, the core feature that makes Bitcoin technology and the crypto technology inevitable is decentralization, blockchain, and decentralization. Now, due to decentralization, you can't, since Bitcoin and the crypto technology is not controlled by a corporation, you can't ban it. You can't ban it. You can't ban it. When you ban it in one region, the system of it runs on a decentralized network. Yeah, so it's not controlled by a corporation. So due to the decentralized feature of Bitcoin technology and the crypto technology, yeah, it becomes inevitable. to the financial technology become an invention that is inevitable to disrupt the current financial technology or financial system. Okay, now having known that Bitcoin and crypto are here to stay, okay, what should we do with this knowledge? What should we do with this knowledge? Now, yeah, having known that there's a, when negative events occur in this industry, we often see, a downtrend. We often see, a crash, a dip in the price of Bitcoin and the cryptocurrency industry. Yeah, now, but what can we make out of this volatility? We call it volatility, the instability of crypto price or market price is volatility. What can we learn from this? Now, yeah, the focus of this tutorial is to show you the bear market, the potential of the bear market, and how it actually made people rich. Potential factors of the bear market. I'm going to be showing you, teaching you to explain two potential factors in the bear market. And the first one is discounted digital asset price. During the bear market, what happened is that there's there are two kind of people. There are two reactions to the market. During the bear market, to the economic situation, to the market situation during the bear market. There are two responses, two type of people, two responses that occur in during the bear market. The first set of people are people that are very fearful. You know, they are very fearful, and once they see that the market has crashed, they panic. All what they do at that time is they don't want to know what the Bitcoin price is or what the market is, and they are afraid, and because of that, they lack courage. Because of that, they are unable to understand the potential, see the potential in the bear market. Okay, why the second set of people are people that are very smart or are smart investor or are smart cryptopreneur. Now, this set of people, they understand what is happening. They understand that, okay, what is actually happening is volatility, and due to the resilience of nature of Bitcoin price or the crypto market price, it will bounce back. It must bounce back. So now in the bear market, the price of Bitcoin and other crypto assets are highly discounted. Now, yeah, so this is what it means to smart investors. In a bear market, the price to them, whenever the Bitcoin price crashed, it means the Bitcoin has been discounted. Yeah, it means Bitcoin has been discounted. It means what if one Bitcoin was 64,000 dollars. That means if it crashed from $64,000 to $29,000, for instance, what happened during the China crackdown, that was what happened on Bitcoin miners. It means that you can buy one Bitcoin with less money, and you can buy with $64,000, you can buy two Bitcoin, and you have you have saving from the amount. Yeah, so this is how smart entrepreneurs or smart investors think. When the Bitcoin market crash, it means the price of Bitcoin has been discounted. When the crypto market price crash, when the crypto market generally crash, it means the price of crypto asset has been highly discounted, and that is a strategy. That is a strategic way of thinking. Okay. Now, the second factor is historical performance of Bitcoin. Now, over time, we have witnessed different negative events that occurred to the Bitcoin and the crypto market, and you know after this event, you see a bounce back. Now, this has not just happened once, twice, three times. This has been the trend, the historical trend and performance of Bitcoin. What I mean is that whenever Bitcoin price or other crypto prices crashed, yeah, it always bounce back. And what does that mean? It means if you can understand that volatility means increase and decrease, it means instability, it means fluctuation. If you can understand this concept, you'll be able to maximize the crash when the crash phase of Bitcoin or crypto. And with that, you know that okay, since it will always bounce back, when it bounce back, you will take profit. Now look at the this chart. Look at the chart. You see that there's we have look at that that support line. You see there's always this up and down. You see the parabolic nature of the curve of the chart. It shows volatility of the market. Okay. Now, the strategy that people that maximize the bear market use is called buying the dip and selling the top strategy. Now, this strategy is according to a very famous investor, Rothschild. His popular saying is that buy buy the dip, buy buy when the street is bloody, even if it is your own blood. Now this means what that leveraging the bear market is for the courageous. What the principle means, what this principle simply means is that when the market crash, that is the best opportunity. That is the best opportunity for smart investor or smart investor or crypto smart cryptopreneurs to buy. Yeah, it means you have a huge upside once the market, return to the bull zone, to the bullish zone. You have a good upside. Now you may be asking, when should I? What is the dip? How do I spot the dip? I'm going to be showing you how to spot the dip in the next slide. Yeah. Now this strategy is very simple and it has two phases. The first phase is the dip, while the deep approach and second phase is the top. Now your ability to be able to know the deep and the top is the differentiating factor between those who makes it in crypto and those who lose big time in crypto. Yeah, so I'm going to be showing you also to add to it. It is for the courageous. Buying the deep is for the courageous, not for any people. It's for the courageous and knowledgeable. Okay, so I'm going to be sharing with you what the dip means and how to spot it, and what the top means and how to spot it. Okay, buying the dip. Now, how do you know the dip? The dip simply means when the market crash, when the market when there's a downturn, when there's a downtrend reversal, when there's a downtrend reversal in the market. That means when the market is going up and there's a sudden reversal in the market, we call it a downtrend. We call it, we in that situation, if it is huge, we call it crash. The market price has crashed or it has dipped. Now, there are two signals to spot to determine if we are in a dip, where if the market has crashed or if we are in a bearish zone. Now, the first is fundamental analysis. You have to know what is happening in the industry, the news, political event, economic event, and that could impact the market. Now, for instance, when the China market cracked down on Bitcoin mining activities and operation and business and crypto business operation, now that was a very major negative news. And because of the size of China market, it had a very huge impact. It had a very huge impact on the Bitcoin price and it crashed. Now that is fundamental analysis, knowing what is happening in the economic environment, in the political space regarding crypto and Bitcoin. Now the second way to signal a dip or a crash in the market is to look at your technical analysis. Look at the chart, look at the indicators. The RSI is a very pivotal tool to use. When the RSI is below 30, it signal the bearish zone. So that means the price of Bitcoin at that zone, it has crashed, and you can maximize the opportunity to buy the dip. Okay, now selling the top. Selling the top. How do you know the top? Now that you have bought at the dip, how do you know the top? Same thing is this what is applicable to spotting the dip is also applicable to spotting the top. But in the case of the top, it is a reversal trend. In the case of the top, it is the reverse. The reverse applies. So fundamentally, you have to also take notice of what is happening in Bitcoin space, in Bitcoin industry, the political event, the economic event, the regulatory event. Yeah, you have to take notice of that. Now, a major news will cause a spike, a surge in the price of Bitcoin and crypto, like what happened last week when Bitcoin future ETF was approved and it started trading on Nasdaq and New York Stock Exchange. Okay, so such kind of event could actually cause a surge and a spike in the Bitcoin price and the crypto industry price and market capitalization. Okay, now technically you have to now use the same indicator RSI. This is just one of the indicators to use. Yeah, you have to use RSI to know if the market is at the top. Now, if the market is in the bullish zone. Okay, now RSI and RSI that is above 70%, 70, because RSI actually measure the market from 0 to 100. RSI that is above 70 is indicates a bullish zone. Now, once you are able to spot a bullish zone, once you are able to spot that the RSI is above 70, then it is the market is at the top. And also the news also confirm what is happening in the industry, confirm that the market is at the top. Then the combination of these two approach, the technical and the fundamental analysis approach, we give you a knowledge, we give you a signal, you help you to know what the market is, where the market is, and what decision to make at that point. Okay, yeah, wrapping up. Yeah, buying the dip is for the knowledgeable and the courageous. You have to know what is the dip, and you have to be courageous because when the market did crash, people will be complaining, you'll be sharing of different thing about what is happening, different negative news, different negative analysis. Well, but it takes those that understand market faces to actually leverage the market crash. And also, when you apply this simple strategy effectively, accurately, you end up making it big in the crypto space. So this video was brought to you by Trenndify Academy. Trenndify Academy is an arm of Trenndify. The vision of Trenndify is to accelerate the adoption of crypto in Africa. And you can join us, and when you join our community, you win our crypto millionaire blueprint. A link to the community is in the description section. Thank you.